All right, let's get this thing rolling. It's been about 2 weeks since I did a proper live stream of any kind. It's good to be back. I will start with Bitcoin, then we'll go into Ethereum, then I will go into BNB, and then we're going to discuss equities. So the reason I'm focusing on Bitcoin rather than Ethereum first is because there's a very sharp tendency in the market that when a beta runs like Ethereum did, and Bitcoin doesn't follow, and Bitcoin starts correcting, which it is, you do not want to be long anything until Bitcoin puts in a bottom. Right now, it feels like this is a top, and it's gonna go for like a flush. You're gonna take out these lows over here. This zone which I'm mapping out, this is the bull bear zone in my opinion. If as long as you're above it, it's bullish and it should be trending higher. But if you go below this, like if you go below $63,500 level, then it's not so bullish in my opinion. That is, this thing was just a fake out in that case. All right, so I'm open. Like I'm open to the ideas and whether it's gonna take this thing out or whether it's gonna trend out above. At the moment, the pattern which I'm trading or like which I'm looking at is, let's go here on the 2-day chart. This inside 2-day candle failure, which you can map out something like this. You have these inside 2-day candles. You had a punch up overnight, which was like, when the ETFs were not open on the holiday weekend. So this punch up happened on Sunday and Monday, and then we started trading down going to Tuesday. My general lean when I see something like this is that you're going to go for a flush for these lows. And once these lows gets taken out, I think people will start turning bearish, but I don't think it's a bearish chart. It would definitely mean that people will start shorting going into support zone, which is this one at around this level, which I've drawn in purple. 65,000, you could say. Basically 65,000, or if you want to be precise, 64,898. That is a very, very strong SR level, which is this level over here from the monthly chart or the quarterly chart. So in essence, I don't want price to go below this level. If you tap it, it's a good long that you should long it, but you should have a stop loss below, like at least below 63,300 if you decide to long this level. At the current moment, the way price is behaving, it's likely looking that it's going to go for this flush. And my eyes literally go here for this open fair value gap because on the 3-day chart, you should be looking at this open fair value gap. Okay, so from this low to this high, this gap in here is a fair value gap. And I think that's what price wants to gravitate towards going in there. So once you do go in there and fill out the fair value gap, I think that's where neutral zone is in the market. Once that neutral zone is achieved, that's where I think bulls are gonna come in and they will try to take the market up again. Because overall this is a bullish chart, but if you do break below the zone, then I would say it's gonna go for this low again. But even then, it's still bullish because as long as you're staying above this bullish order block, this is just a higher time frame consolidation. So my only concern at the moment with this push is that it hasn't really taken out this last lower high. It could be making another lower high in comparison to this one, which is this lower high over here. So when you see a bunch of lower highs being printed, you have to be a bit cautious. But I'm open to the possibility that when this pullback does happen, you could print a higher low in comparison to this higher low when you tap this level over here at 65,000. Okay, so that's more so for Bitcoin and what I'm going to be watching. But at the moment, I'm not longing Bitcoin. It's not a good setup for long. The way it's set up, I need to give it more time. Now for Ethereum, this is turning to be very bullish for Ethereum, the way this chart has developed. Now there are certain things you need to be keeping in mind because you are dealing with higher time frame levels as you go on. Now these levels which are mapped out in Ethereum, they came from the quarterly chart, which is the 3-month chart. This is the quarterly high before you had the massive drop over here. These were the quarterly highs for the inside quarterly candle before this punch up happened and you push down. So when we ran into these quarterly highs over here, you can see that the market suffered a pretty significant correction. Now we are trading within that same resistance zone, which I am quite wary about, that the market does not really like this zone, mainly because of this bearish order block which is sitting over here. At the current moment, longs are low quality when you are trading in the zone. What I would like to see is that price pulls back to at least 35,000, sorry, 3,500, takes out this low, and then I would start scaling into longs again. This is choppy price action, and you do not want to get chopped out, at least trading in this area. And at the current moment, what I'm more happy about is that this down candle could potentially be a monthly bullish order block, which means that my spot long positions are kind of safe, that I can move the stop loss on the spot long positions down to 2,800, because that you need to be trailing your stop losses in a trending market. Like I was aware that you're going to be going for new all-time highs, but I cannot keep a stop loss down at like 1,500 anymore when you know that this has formed a bullish order block in this case. Now, look at the timer on the monthly candle. It closes in 3 days. So one of the main reasons for me doing a live stream right now is because the monthly candles are going to be closing for everything, whether it's equities, whether it's forex, whether it's indices, whether it's crypto. Like the entire cycle is kind of coming to an end for this month. So you need to be mapping out the plans for next week when we start the new month as well. And not only are we going to start a new month, we will be starting a new 2-week candle. So this 2-week candle also comes to a close on Ethereum, or everything basically, not just Ethereum. And we open a new 3-week candle this week. So I think the real movement is likely going to start next week when the new monthly candle happens, because this monthly candle is already like very, very strong. And I want to see it close above this high of 3,700. If you close above 3,700, then any pullback down to like 3,575 is a very good long for Ethereum. And one of the main reasons I'm looking forward to it is because if you go and look at the ETH BTC chart and go on a 2-week chart, this is almost perfect. I had this level drawn out in months in advance that I was waiting for this fair value gap to be filled. The market tagged it over here, jumped higher, went to like a fully filling it out. The ETF application gets approved, and then bingo, you have a massive reaction coming from here. Now, price is actually testing a macro downtrend line. And I think the chances are very good that it's going to attempt a breakout next week. Like it's already looking like it's doing it. However, just because it's doing it right now, it doesn't mean that it's going to keep pushing in a straight line. Yeah, I would like it that if it kept pushing, my spot long positions are just going to do very well. However, if I want to like get a leverage position and using my prop firm account, I cannot attempt a long over here. But I do like to see that the monthly candle is going to be putting in a bottom like this. Like if you take this thing out, this is a very proper bottom because you're maintaining an SFP against this low. You see this was an SFP over here, reaction, but it did not close below it. Even if you came down, went to fill this gap, reaction, maintain the SFP. This month went back down again, reaction, and is closing much higher, confirming that this on the monthly chart for ETH BTC is a bullish auto block. So from a macro standpoint, the spot lock positions you have on Ethereum, if you have been holding those with me, they're kind of safe. I don't think they're gonna go anywhere because this bullish auto block is on ETH BTC, which is basically this bullish auto block on the monthly chart for Ethereum USD. So you should be okay if you put a stop loss below at 28.11 on Ethereum. But the wild card, in my opinion, is Bitcoin because Bitcoin, in my opinion, is undergoing a correction. And if Bitcoin goes down, it's going to bring down Ethereum USD along with it. But I want to see if Bitcoin actually like holds support or no when it does flush out. My basic premise is that it's going to hold support. But in the off chance it doesn't, and it actually breaks below it, then I would think that Ethereum would come down to test this particular zone around here. If Bitcoin breaks support, then you might have a deeper correction to form a higher low in comparison to this one. Like this being a higher high because you have broken above this lower high. Even though you haven't gone above there, that's fine. You don't really have to because you went above this lower high. It's a shift in market structure. So you can still like undergo a correction, a sizable one at that, and still be bullish, create a higher low compared to this one, and then from there take it back up again. That all depends on how Bitcoin behaves. All right. Because the ETF approval happened on Ethereum and Bitcoin started behaving kind of like bearishly, that's raising some concerns in my mind that I'm thinking that maybe it does not want to trend at the moment because you have like major news out of the way and the big funds are kind of like cycling their stuff out because they were positioned already for that ETF approval to happen and that happened. So now they're like kind of taking profits and getting things out. It's kind of like when Bitcoin got its own ETF approval happened, which is over here. Let me show you. So this was the ETF approval time. I think January 4th was the ETF approval date. You had a massive spike down over here. And then price punched back up again. And for at least 3 weeks or 3 weeks, you were down on the market before this massive surge happened with the inflows coming in the market and whatnot. So my point is that you could still undergo this mini correction in the market, which is like 20% correction. Could be something like this, or it could be like this. It doesn't matter. It's still a mini correction overall. Um, so that will be responsible for causing a correction to happen in Ethereum as well, because Ethereum's spot ETF is what got approved, and the spike which we saw was because of that approval coming in. All right, so I wouldn't be surprised if you see like a 20% correction, which basically brings it to this area. And if you come back down to this area, along with everything you have, that's a massive support zone. This thing over here. So that's more so for Ethereum. Then when you look at BNB, I think with BNB, the chart pattern, you gotta go on the weekly chart for this. It's something like this, where you have a massive triangle being printed. Now, if Bitcoin does undergo correction, it's going to bring BNB down too. But in my opinion, it's not going to break down. What it's going to do is you're going to come down to test this trend line over here, and then you're going to pump up again. Now, I think the next ETF for approval is going to be BNB's ETF. So, like, they're all going to like cycle through, right? Because Bitcoin was first, we all knew that Ethereum was going to be second because that's the second largest cryptocurrency. And then they will like go down the line. The third largest one being BNB, then Solana, and then I don't know fifth, sixth, seventh, eighth, ninth, and whatnot. They're gonna like approve every ETF because it's free money for them. They get so much fees from like the trading fees which they collect from people wanting to like position in these digital coins, and then like if they're making money for free, why not take it? It's like low hanging apple. So yeah, I think the market is gonna be sniffing this thing out and be like BNB's ETF approval is gonna be next. So another macro event you need to be aware of now is the ECB rate cut. So the European Central Bank is going to be delivering a rate cut next week, Thursday, which is ironic that US is not going to be the one doing it because I think the US Fed is not looking at a rate cut to happen until like September. Um, that, in my opinion, is a bullish event for now. Like the market has been rallying into that. One of the reasons I was like favoring German longs is because the ECB was gonna like deliver a rate cut, or is supposed to deliver a rate cut next week, and Germany has kind of been like leading that over time. Now, some of the things which I don't like about the German stock index is this flat. Like, yeah, I don't really like that. I think at some point when the rate cut thing is done with, the market is gonna like start selling off and it's gonna go for this flat. But at the current moment, the price action I'm concerned with on Germany is this level. This is a bullish auto block. So if you come down to this level, I think that's a long. Now, how can you like profit off of it? Like there are a few tickers on the US stock exchange which are like major German companies, SAP being one of them. So you see SAP when you type it, it's listed on the NYSE. SAP is directly correlated with the DAX. So if you're seeing a correction happen in DAX, that's because SAP is also going down along with that. But if I'm saying that German DAX is going to go up, that basically means that SAP is also going to go up, so you can play option calls on it directly. And there is a discrepancy going on in the global financial market. So if Germany is delivering a rate cut and US is not, so it will be a lot more favorable to actually be long on German stocks, is what I'm going to think, because of that rate differential which we have in the market. Now, essentially speaking, we are coming to an end for this month, which closes in 3 days. And the market is kind of like putting in a top and it's coming down. Let it come down. It's fine. That it's normal to see it happen. Because the market never actually closes on the top for the month. It always like puts in some kind of a wick on the monthly chart and then it retraces. Like always remember the anatomy of the monthly candle or the daily candle, which we've discussed. Like if you're anticipating a bullish monthly candle in the next month, what are the two things which are going to happen? Like say for example, when we were anticipating this bullish monthly candle, you would have the open. There will be manipulation to the downside to put in the low of the month. There will be punching up happening for the remaining portion of the month. You go in and you put in the top, and then you start retracing before the close happens for the month. Okay, so these four levels need to be printed for every monthly candle, every daily candle, every weekly candle. Like we've discussed this in the mentorship. Okay, so I'm just like refreshing those concepts. Now, our job as traders is not to be positioned for this month. It's supposed to be to position for the next month, which is going to happen. So you need to be on the lookout for the opening of the new monthly candle, which will be next week on Monday. And basically mapping things out that, okay, if I am looking for a bullish monthly candle to happen, which supports need to be defended as it's coming back down. Now, in my opinion, this is a good support on the daily chart. It should not go below this daily support. If it went below this daily support, then there's not much support until like this gap gets filled. Right? So this needs to get defended like in the next 2 days or like tomorrow, which is essentially German DAX defending this order block over here. Like we have discussed what an order block is. An order block is a bullish, like a down candle being formed at a key SR level. And this is a key SR level because this is a major high in the market before you had a massive, massive downturn. So if the market is coming down to test this order block over here, I would think that this is a support zone. So if you were to long this market, you would be entering a long over here with a stop loss below that. And if you are bullish overall, you would be aiming for higher highs in the market, which means it goes up till that. So that's a 5.23 risk reward ratio. Now the same thing if you were to apply that on SAP, which is over here. SAP's bullish order block would come somewhere around here, same as the DAX. So if SAP comes down here, you could take a long like this with a stop loss below that and aim for new highs on them. Okay, so that's more of an options play you can take. But the stop loss needs to be respected. If that stop loss gets taken out, then you're out. You should not be like holding that position because, in my opinion, if that thing breaks, it's going for a much deeper correction, and you'll be taking a fib from this low all the way till this high, and you'll be like looking at 0.5 and 0.618 if this order block breaks. It's all about the market structure. Like the market structure should remain intact as bullish. If you break the market structure and take out the higher low in the market, this is a higher low in the market, then you got to be zooming out then and anticipating that the daily chart is going for like a pullback, and you will be anticipating a daily higher low to be printed in comparison to this higher low. Okay, so in that case, this would be like a daily lower high in comparison to this one if this low gets broken down in SAP. Okay, so that's how I would like decipher the market. Even though I don't really trade SAP because I have direct access to DAX stock index, I can like trade DAX futures. But I look at the price action on SAP on what it's doing because it directly influences what the DAX is going to do. SAP is the NVIDIA of Germany. Okay, it's a software company. Either it's NVIDIA or it's like Microsoft. So you need to be paying attention to what SAP is doing if you want to like trade DAX. And since the German stock market will be receiving like a rate cut next week, my eyes will be like what Germany is doing and not exactly what US is going to be doing. Because I'm going to go into the status of what the US stock market looks like. But I just want to get Germany out of the way. So at the current moment, I will be looking at this price action when it comes over here. But what's more concerning to me now is you also have to like entertain the bearish side, even if we are looking at the fundamental driver being bullish. Like rate cut in a sense is going to be like bullish for the market. However, there is something happening which I don't like in the market, which is that this bearish order block got respected. Right, if you take a fib from here to here, it rejected from 0.79, and after this bearish order block got respected, you're forming a new bearish order block on top of it. You see how what I'm trying to suggest over there? So even though we have an SR level and you have this massive bullish order block on the 2-day chart, on the daily chart you're getting contradictory signals that the daily chart is showing you that this could be like a lower high in comparison to that one. Okay. And this could be like a propulsion block. Like if the market closes in 6 hours or so below this low, then I'm not going to be bothering with this level. Okay, I'm not going to be holding that long for the next day. Like I'm still going to long it and I'm going to put a stop loss over there. But if the market does not react to it and go up from there and closes above that, then I'm not going to be holding that long position because it would have confirmed that this is actually like a propulsion block. Like you don't want to be holding a long position when the market is confirming like a bearish propulsion block in front of you, right? So you still got to be trading on what's happening on the daily chart and what's happening on the 4 hour chart. Like the technicals need to be supporting it, but you also need to be aware that you're approaching a support zone in this case, which is on the like high time frame level. This is the high time frame level, and this is a 4 hour support zone sitting on that high time frame level. Okay, so right, it is pretty one-sided action. So I'm gonna be anticipating some kind of a bounce happening from here when the market does hit it. But going into the US stock market, the setup in play for the US stocks is what I was looking at on the 2-day chart is this inside 2-day candle. So I'm going to be favoring like a flush happening in the market where the market goes for these lows and basically tags this level over here. Similarly to, the German DAX is tagging this level. I would anticipate the Nasdaq does the same. It's just that with whatever happened with Nvidia, the market is kind of like feeling very testy. But it's like, it has some kind of a new power inside it. But there are certain things which have developed in the market which do not give me confidence. One of the main things being this being a bearish auto block on the 4 hour chart. So, in my opinion, I think we're undergoing a correction against this low here, like from this low all the way till this high. So you could take a fib from here to here. Like we tagged the 0.382, but it could easily go down to like 0.618 if you defend this lower high. If you make a higher high over here, then yeah, it's not gonna go down anymore. But if you defend it and you start selling off, just like DAX is selling off right now, and you take out this low, then I think it's an easy going down to like 0.618. Now 0.618 in general is a very strong SR level because if you look at this level over here, this was the tap on this level before this massive sell-off. It defended over here, it defended over here, and it very calmly just like reversed about that. So it hasn't really come back down for like an SR retest. Now this level I will be paying attention to if the market were to decide to sell off and come back down. Now I'm not looking for longs personally because one of the reasons which I discussed is that you will be closing the monthly candle very soon. Like in 3 days you'll be closing it. Look at the monthly candle size. It's already like super bullish. Like how much more can you like eke out of it? There's not much movement left. There's not much energy left for the market. It needs to like take a breather, do like a pullback. And once it's done with the pullback, then we can like look for long positions to happen at major support zones. One of the major support zones you need to be looking at is the previous month's high and the previous month's open. Now in this case, the open was also the close of the previous up candle. Now this was supposed to be a bearish order block because the market actually sold off very significantly. Like you actually closed below the up candle over here. So this was meant to be like a resistance zone. However, with Nvidia's earnings and whatnot, the market just like punched above it and you broke above the resistance. So that basically means that this entire zone is now like a higher base in the market, and you will not be going below this level. Like basically, this becomes like a new bullish order block, and for like months and months to come, it would take a recession, let's just say, to break below the support zone. Like this support zone is equivalent to this support zone in the market, all right, which we will be confirming in 3 days. And just like that, it's also equivalent to this support zone in the market. So once you closed above the previous down candles, that was confirmed. It has confirmed as a bullish order block, and the market kept ripping for months to come, right? In this case, when it confirmed as a bullish order block, you had 3-4 months worth of rep in front of you. When this confirms as a bullish order block, I'm telling you, June, July, August will be like massively bullish because it's a re-election cycle, like presidential election cycle. Okay, and during the presidential election cycle months, the summer months, which are like June, July, August, they're very bullish, and the market is setting up for it. Like it's showing its hand that it wants to rip higher. Okay, so do not try to fade it. Like just wait for some kind of a pullback to happen in the market, and if you do get the pullback, it will be a blessing. And I think so. These levels, if they do get tagged, that's a very strong long hold in the market. But at the moment, there's nothing suggesting that it should go down. Like if it goes up and takes out this high, then yeah, it's just pushing. Like, I can't do much about it. You just gotta be long on the market. But if you defend it, or like if you reject it, like when I was looking at SPX, this on SPX is what you call like a bearish order block, right? Now I was paying attention to this SR level because this, in my opinion, is a very strong support zone. Just hold on. Yeah, this makes sense. So this down candle is a support zone. Okay. So if SPX makes a lower high and it goes down and tests this level, long it. Long it with everything you've got and put a stop loss below here, below 5,200. That's a very high risk reward ratio on the long. Because when you look at the daily chart, notice how this daily candle, like I'm going to take everything and I'm going to explain this to you so that you learn to recognize these things in real time. When the market was going to push, I'm going to take this thing out too. So when you're looking at this chart, always try to eye the fair value gaps which are present on the daily chart. Now there's a daily fair value gap over here. Okay. So from this high to this low, this area is a fair value gap. From this high to this low, this is a fair value gap. There is no fair value gap over here. Now this is also a fair value gap. So essentially what I'm saying is this region is a fair value gap. Okay. This region is a fair value gap. So this low and this high, the region between that is a fair value gap. This region is a fair value gap. Now, what's a high likelihood of which fair value gap needs to be filled before the market can resume uptrend? Does it need to come here? Does it need to come here? Or does it like fill this thing and this goes? if you were to come here, it would still be okay. Like you're not going to be breaking market structure. You could actually come down here and be bullish. That's fine because my eyes are like sitting over here with this massive up candle, which caused a downtrend. This was a resistance zone. Whenever a resistance zone flips, that acts as a support zone in the market, which means that it's okay for the market to come down till here and still be bullish. What's not okay is to go all the way down here because if you go to like the lowest fair value gap, you would be traversing below this resistance zone, which is meant to act as support. Okay, so having that deeper of a retrace is not okay. But retracing till here, first one and the second one, that's fine. You can do it. Now, notice how precisely it filled this fair value gap over here. From this low to this high, it was like a ting like this, and then it punched higher. When you notice something like that, where a fair value gap is filled right to the exact dollar and it goes higher, that's balanced price action zone, which means that the market has no business going below that if it's bullish. Whenever there's like balanced market which has been created, you do not want to see the market go below that. So that means these fair value gaps do not need to be filled. Even though I know they are fair value gaps, there is no reason for the market to go down till there if it's bullish because it has already like filled this fair value gap on the first end and it has pushed to make new highs. That's a bullish market structure being printed as it pushes higher, right? So you push higher. So since this fair value gap is filled over here, revisiting this zone is a no-no. You do not want to be revisiting this zone, which means that the pullback which happened on top of it is a support zone, which I was like just talking about, like how I decide that this is a strong support zone. So this is an SR level. It's forming after it filled this fair value gap and it punched higher. Now, when I discuss Elliott wave, I will be talking about how you could spot this as a 1, 2, 3, 4, 5, like that. And then once you complete the 1, 2, 3, 4, 5, there should be like an ABC correction happening. Now, this reaction was an A wave down. There should be a B wave up, and there should be a C wave down. Against this 1, 2, 3, 4, 5, there should be an ABC correction. Okay. So now we're setting over here. You had this punch down which happened at A. I'm anticipating that this could be a B, and I'm also anticipating that there could be like another sell-off to carve in like a C wave to the downside. And that C wave could likely put in some kind of a higher low in the market. And once you recognize that this is a 1, 2, 3, 4, 5, you can take off it from this low all the way till here and look for 0.705 and 0.79. Like SPX really loves the 0.705 and the 0.79. It doesn't care as much about the 0.618 is what I've noticed. But Nasdaq loves 0.618. All right, it's kind of like a discrepancy in both of them. So when you had a sell-off happen, notice how it defended the 50% and just like magically started punching higher like that. Like whenever there's an A wave happening, A wave generally terminates at the 50%, and then it bounces, makes you like it convinces you that it's bottom in some fashion, but then it goes for like another leg down. It takes out the slow, takes out your stop losses and whatnot, and makes you believe that it's turning bearish, but it's not actually turning bearish. It's just doing like a C wave correction to like a 0.75 or 0.79 in this case, is what I'm thinking it's gonna do. But we'll see if it actually does that or not. Like SPX has more of a tendency to actually do it than Nasdaq doing it. because Nasdaq is very bullish. Like, I don't know. I really don't know if it's actually going to come down to the 0.618 Feb, which I was talking about. So same ways, like, the 1, 2, 3, 4, 5 I drew out on SPX is from this low. Uh, Crap. I don't think so. It's from that low. I'll have to compare. So this low on S&P 500 is this low over here on Nasdaq. So yeah, I was wrong here. But we are measuring the 1, 2, 3, 4, 5 from here. So that's a 1, 2, 3, 4, then a 5. So which means this low will be measuring it for Nasdaq. So from here, we 1, 2, 3, 4, and this entire thing is a 5. Okay. This was Nvidia's earnings. Nvidia is still pushing, by the way. Like, I was looking at Nvidia before the market was going to open. If you look at that, Nvidia is still up, like, 4%. But Nasdaq is not really following through with that because the algorithms recognize that it's coming close to the end of the month, and they have only like a specific set of movement they can do in the entire month, and it's kind of like sitting at the top end of the movement for the month. So even if Nvidia is pushing for a few percentage points, Nasdaq is still not wanting to do that movement because it's reserving that movement for next month. But it's not going to do it. It's still going to do it, but it's not going to do it this week. It will just do it next week, is what I'm thinking. Okay, so for in comparison, this is a 1, 2, 3, 4, 5 like that, and you would be taking a Feb from this low, the high, and looking at 0.618 when it comes here. Now, what's interesting is that the 0.705 is lining up with the SR level we had decided on the monthly chart. But I personally like the 0.618. Like, I think the 0.618 is really good. And given that Nasdaq is the stronger one, what was defense happening on S&P 500 at 50%? That defense happened on Nasdaq at 0.382. So that kind of means that if S&P 500 is going to go to like 0.705 and 0.79, Nasdaq is only going to go to like 0.618 because it's the stronger one out of the two. But we need to see like more follow through. Like, you cannot just like be this lethargic and anticipate such a sharper drawdown to happen in the market. But I think it's likely going to happen because Germany is giving us that drop currently, and the US stock market kind of like goes along with whatever the German stock market is. They both do not deviate. So when S&P 500 comes down to like 52.19 and 52.03, you need to be paying attention to JPM because JPM is going to be responsible for bringing S&P 500 down. Like, the price action on JPM, I think it's for like a down week. Personally speaking, it should be coming down here, top 194.87. Now really pay attention to this level here. I'm going to show you. So this high and this low. When you notice a very thin open gap like this, that's a very sensitive price zone. If you were to dip into this zone and you fill this inefficiency out, not only are you filling this inefficiency out, you're also testing a very strong bullish order block on the weekly chart. So when JPM comes into the zone, you need to be looking at long positions on JPM for like new all-time high after that. Does that make sense? which also lines up with the 0.618 over here. Like everything kind of like lines up in that case. Now, after taking out the previous all-time high on Amazon, it's undergoing a pullback. This is one stock you should not be touching because the risk reward ratio is kind of like meh on the long side. It needs to undergo some kind of a consolidation or some kind of a pullback on the weekly chart before I decide longs on it. Netflix is more bullish. Like I have held my long-standing target on Netflix for new all-time high, so you still have another $50 to trade it to the upside. I mean, it's a very easy long, in my opinion. Like if you look at the monthly chart, you can tell that this is a bullish order block. Now, Netflix earnings is on July, so you could take like June expiration calls for new all-time highs. I think it's gonna push to new all-time highs in the coming month or so. Costco, Costco. This was one of the best longs I've taken on Costco when it broke this downtrend line and it went for like new highs. It was an easy call too. Like I could tell that this was an easy correction for a wave 4, and you should be going for like a wave 5, which I did. Now once it has done this push, I don't have any setup on Costco. What I can suggest is that it does look like it's gonna push because of the monthly chart on how it's closing, but I prefer not to be positioned on that. But Costco is like a utility, like it's a utility stock, and it's gonna do well given in the high inflation environment. Like the stock market is being pumped by artificial liquidity, but inflation is also going higher, so the cost of goods is going higher. Like anything like cocoa, soybeans, orange juice, any commodity you can think of, it's gonna go higher in price. And Costco is like the wholesaler, which is gonna be selling that stuff to people. So there is a boost to the stock itself because of the Fed pumping liquidity or Janet Yellen pumping liquidity because of the election cycle. So there's an artificial boost with stock price. But on a fundamental basis, because of inflation going higher, they also have like a higher profit margin because people are still gonna purchase that stuff, and they are the subsidiary for basically providing that stuff, which is like all the inflation items which are going higher as well. So this creates like a dynamic where Costco is going to be profiting from it like a lot. And that is mainly why this has been like a very juggernaut of a beast. Like I still remember when I mentioned this chart to you guys, right? This was on the 3-month chart. I think on the 2-month, I mentioned this as a inside 2-month candle, inside 3-month candle, and I mentioned that when it breaks out, it's gonna be massive when it does, which it did. Like you can see the size of the candles; they've been like very very big. And I profited like on and off from Costco. I didn't fully write it like from this bottom to this top, so I've taken like 3 long positions. All 3 of them have been actually profitable. So I've had like my fair share of profits from Costco. But I hope you guys caught that movement too. And it's been like a good stock to trade for the past 6 months or so. I do want to say Google is going to go higher. It's going to continue going higher if Nvidia is going higher because Google is directly influenced with whatever is happening with AI technology because they're like at the forefront of like that innovation, just like Microsoft is. So if you see demand happening for microchips and whatnot with NVIDIA like punching high like it is over here, you should anticipate that Google's going to catch up and it's going to be trading higher too, along with NVIDIA. They both are kind of going to go hand in hand. It's kind of like that situation where um, if you see people installing new satellites on their homes to like get like a cable signal because they're living in a new home and they need new cable line in their home, they're also going to need like an internet line. Like if you want like a phone line in your home, you will also need the internet line. Like Google is the one which is providing the internet line, and the satellite dish is what NVIDIA is providing. So you need both of them. Like they serve different needs, yes, but people do not live by just like on a phone line and not have the internet line. Like it's bizarre to think about it in the current world at the moment. So if you can see clearly that there's a demand for that cable line satellite to be installed in the home, rest assured there will be demand for the internet line to be basically provided as well, because people would want to surf the internet if they're living in that home. I still haven't decided on long Adobe. It's not a bullish chart. It's just not. Like I mentioned this a few times that regardless of whatever jumpy price action it does, it's making lower highs, and as long as those lower high patterns do not invalidate, it's gonna go down till here, till 411. This flat open which is sitting over there, I think that's gonna get filled out. So the quarterly chart, this is a fair value gap. So filling this fair value gap is what Adobe is doing down till 402, which would also fulfill this flat open over here. Oh, Apple. Oh, Apple, Apple, Apple. This thing is bullish. This turned out to be an ABC correction like this. This is the macro ABC correction, which means it's going to go for like a macro breakout in the coming weeks or so. I mean, it's already attempting it, but now I'm thinking from an elevator standpoint, this was a one, that's a two, that's a three. This entire thing was a four, and then you're going for a five, and the five is going to be pretty big. Um, let's see, like next month, yeah, it's gonna be bullish. It's gonna go to like 214, 215. Minimum 220, I think, would be like a sizable target in Apple. Because when you look at the 3 month chart, it's been consolidating for since July of 2023. So you have a year worth of consolidation in Apple, which means that it's really packed up that it will be like an explosive breakout for the coming quarter. Now next month we will be closing this quarter. The real expansion is likely going to be starting in July, where you'll be like anticipating the next quarterly candle to be like punching up to like 220. Think of it as like Costco. Like this chart, specifically this uh, jam-packed price action, is what I noticed in Costco over here. Does that remind you of Costco? That's the same thing. You have like multiple quarters which are like sideways with each other, and it's just gonna need some kind of a catalyst. Like one product Apple releases, which is like, oh my God, we need this. It could be like a new iPhone, it could be like a new iPad, it could be like a some new chip they release, which is AI powered or whatnot. Like just one product they're gonna release and they're gonna be like, okay, well, we need to buy Apple. Just that. I it's hard to say how far out I would buy it. Um, so if you wanna long Apple, maintain a stop loss of 180. Like use the 3 week chart. I've always mentioned that 3 week charts lows are what you want to look at if you are long of anything. The stop loss would be a 180, but I don't really have an entry at the moment. Like I need to see a proper trigger where a long trigger needs to come in the market before I enter long. At the moment, it's just like free floating, but I also recognize that this monthly chart is pretty damn bullish. So one of the reasons that it's bullish is because of this massive gap up we had on earnings. So I need to see some kind of a pullback on the daily chart. Like when you look at the daily charts RSI, it's looking good. Like it's bullish, yeah. But I don't have a setup at the moment to long Apple. Like I cannot blindly go in there and be like, I just need to be long Apple when it could like undergo some kind of a correction. If it taps like 183, like this level, then I would long it. Yeah. But we first need to like wait for this monthly candle to be closed out. I'll think about it next week. Like I'll see how Apple evolves this week before I decide on what option contracts I need to be playing on Apple. No, I bet is basically Bitcoin. You can likely see that this is printing a very strong monthly candle. Now, just because you're at the end of completing this monthly candle, it doesn't mean that it's not bullish. It is pretty bullish the way I look at it. It's just that because you are coming close to the month's end, there may not be like a lot of movement happening. The real movement is going to be happening next month. Oh, sorry, next week, which starts a new month. Like starting from Monday, I think I will be like looking into option calls on Baidu as well. But my main concern is that Baidu is not actually reflecting the true price of Bitcoin, that it's kind of like lagging behind a lot. So I don't know how much of a lag behind it's going to do when Bitcoin actually that starts going. If it actually is going to be like, giving me the best bang for the buck for my option calls or not. So I would much rather just buy spot Bitcoin or like spot Ethereum instead of like focusing on option calls. Tesla, I'm still not gonna touch Tesla. It's not. There's no follow through. Like when you look at this candle, it's a pretty decent candle, yeah. But we just didn't have any follow through after that. Like we haven't even broken market structure on the higher time frame. In order to break market structure, you would have to like go above this lower high at 205. Until it doesn't do that, I have no interest in trying to buy it. I don't care how good this candle looks. Like just after you print like a massive push like this, it goes sideways for like 4 weeks and doesn't go anywhere. So that means that there's lack of demand, even if you are seeing like a short squeeze happening. Now, SMH is like having the time of its life because of NVIDIA. That's also telling you that QQQ is going to be following, like it has already followed. SMH is actually catching up with QQQ. That this push is above this all-time high. So yeah, I think they're both pretty balanced at the moment. Don't try to long meta. Just don't. I would not touch it at the moment. Like this is not a bullish chart at the moment. I think I want to see a flush happening to the downside to 414, go into 402, likely tag this previous all-time high. Then I would think, yeah, this is a good long, but not here. I don't think it's a good long here. Microsoft should continue pushing. This is a very strong pattern. Like when you look at the 3 week chart, this is a bullish auto block because you took out these lows, right? There's a flush over here, and then you rejected and went higher. So because of that, I am convinced that Microsoft should keep pushing for the next 3 weeks or so. It's really your choice if you want to focus on QQQ itself or you want to focus on NASDAQ itself. Oh, sorry, Microsoft itself. Because Microsoft going higher means that QQQ is going to go higher as well. It boils down to like which product gives you the better bang for the buck. I think Microsoft gives the better bang for the buck, so I would play Microsoft calls. I just wanted to focus on AMD for a moment. The pattern on AMD is actually pretty good because of what happened with Nvidia. I think the market is finally stepping into AMD and it wants to buy it. So over here, this was a bullish support on AMD. Like it's a bullish weekly order block, and price filled out this open gap over here when it came down. Now price made a bunch of inside weekly candles, like this one for example. So this inside weekly candle rejected, then it formed another inside weekly candle, took the lows and punched higher. So that's a weekly low being printed, and I think this is a very strong low which has been printed in the market. For the coming month or so, I think AMD will likely be pushing higher and may even attempt to go for new all-time highs. It's a possibility. It can do that because this is a sizable low which has been printed in the market. So the S&P 500 is not going anywhere. It's just like slow bleed. They will just like drain the option premiums. That's probably their play and what they want to do. I don't think this week is actually going to be like a trending week. It's likely going to be just like a choppy week. Majority of the move is likely going to unfold next week. So save your buying power. Like don't chop your accounts up just because you want to trade this week. You have to recognize which weeks are high probability weeks, which weeks you actually want to be engaging in the market, and which weeks you need to be like taking it chill and just like be on the sidelines. This is one of those weeks. I don't want to be actually trading the market this week. I just want to be like watching and mapping things on how things are unfolding. Like it's nice to when you understand price action and you understand the dynamics of the market, you understand how the market ticks, you can choose when to engage in the market, when not to engage in the market. Like that's a superpower in your hands. Like not many people can actually tell if you want to be actually trading in the market this week or you should not. Like only very few can tell that this week is like a throwaway week and I need to be like preparing myself for like other weeks to like gain in the market. And people who actually go in the market and try to trade when it's looking clear that nothing big is going to happen, what they're going to do is they will be draining their emotional capital because the market's not going to bring you profits because it's not going to move that week. And they will be getting frustrated because they're getting chopped out left and right. And on top of it, their capital, let's say they started about 10K and the market didn't go anywhere, but they tried to position for the market to go somewhere and they were like trying to impose their will in the market and the market didn't behave. They lost like 2K or 3K. So when they start the next week, when it's supposed to be like a high probability week, but they are going in that week with less buying power because they already like got chopped out in the previous week or so. So learn to recognize when you should be engaging the market when there's nothing being presented and you need to be sitting out. If this level got tapped on DAX, now it needs to react from here. If it doesn't, then that's trouble. And what's interesting is that Dow is actually having a very bearish day in total, but it's not being reflected in Nasdaq or S&P 500. I mean, S&P 500, yeah, just a little bit, but Nasdaq definitely not. In DAX, yeah, there is, which kind of makes me think if the dollar is actually going to go higher. And look at that, this inside weekly candle, it's taking out the low. Cool. All right. Okay. Okay, I think that's pretty much it in terms of the market on what I wanted to discuss. I'm not going to go into the foreign currencies. I think they're pretty useless to trade at the moment. With the equities, I've covered most of it. With Bitcoin, I've covered most of it. Like I'm anticipating like a flush to happen in Bitcoin, which should also like cause a pullback to happen in Ethereum. I've covered indices. This week I don't see anything. Like even on the news front, this Friday where there's PCE data due, which could cause some movement. Until then, I don't see anything in the weekly calendar, like any major news event which might move the market. There's nothing there. So it's best to wait for like next week to like start the new monthly candle, and that might present new opportunities in the market. Okay, so until then, I will catch you guys later. For the mentorship, which we're going to be doing, I will be putting in a poll of what time suits on Thursday because I have some plans on Thursday evening. Either we shift on Wednesday evening, which would be tomorrow, tomorrow evening, or we don't do it this weekend, we start on Sunday. But I'll get your opinion in the discussion floor, and we'll take it from there. All right, I will catch you guys later. Have a good day.